standardization in it. For this session, may I first invite a highly respected and prominent Sharia scholar from Bahrain. He is Sheikh Isam Ishaq, who is the Deputy Chairman at Discover Islam and also that of the Governance and Ethics Boards of Aaoifi. Sheikh Isam will be serving as the Chairman of this session. Joining him on the stage will be 4 panelists. Dr. Ahmed Tahiri Jouti, CEO at Maali Consulting. Mr. Khalid Havaldar, MD and founder of Accreditas. Mr. Khalid, yes. Mr. Saeed, who is Director of Research at ISRA. And Dr. Muhammad Damak, who is the Global Head of Islamic Finance, S&P.
السلام عليكم ورحمة الله. نرحب بالحضور ونبدأ مستعينين بالله هذه الجلسة، وهي بالعنوان الذي أمامكم: مستقبل المصرفية الإسلامية، مرئيات الحضور عن المصرفية الإسلامية خلال 30 سنة القادمة. المتحدثون كل منهم من المتخصصين في هذا الباب، وكل منهم له بصمته في هذا الباب، وتراجمهم موجودة معكم في الأوراق التي بين أيديكم. ونبدأ بورقة يقدمها الدكتور أحمد عن شمالي، ثم سيعلق كل من الحضور على الورقة ويدلي بدلوه. نمر بعد ذلك على بعض النقاط، المسائل المهمة المناسبة، ثم نفتح الباب للتفاعل مع حضراتكم. دكتور أحمد.
بسم الله الرحمن الرحيم. الحمد لله رب العالمين، والصلاة والسلام على أشرف المرسلين. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. First of all, I would like to thank Aaoifi for its kind invitation, and I'm glad to be part of this conference, which is one of the most prestigious conferences in the world of Islamic finance. Let me start my presentation with a postcard that I brought from the past. As you see here, this is a postcard that was elaborated by a French artist called Jean-Marc Coté between 1899 and 1910. Jean-Marc Coté and his collaborators tried to predict the future of the transportation industry. He was confident that by the year 2000 we would have colonized sky and sea and would have recruited some of their residents for our transit purpose. We are in 2018. I don't think that someone here in the hall rode a whale to come to Bahrain. So, which means that predicting the industry future is a perilous adventure. Nevertheless, this exercise is very important for the investors and for the whole industry to know where to invest and when to invest. That's why, rather than predicting how the industry would become, I tried to define how the industry should become. So, as you know, any industry transformation means adopting a new business model that links an emerging market need to a new technology. To understand how this transformation would occur, we need to map all the technologies in the industry itself, but also in the related sectors. Then we need to identify all the players that can influence or be influenced by the new transformation, then it is very important to measure the potential of every new technology to replace an old one. And then we can identify the new technologies to be introduced in new transformation, the new transformative business model. My presentation would be divided into two parts. The first part is about the challenges that are facing the Islamic banking industry, and second part is about the transformative business model for the next generation of Islamic banks. So the major challenge that is facing Islamic banking is the weak market share compared to global finance. Today, Islamic finance represents 0.75% of the global finance. This is due to the limited number of countries that are adopting Islamic finance, but also in the low market share of in some countries where Islamic finance has just been introduced during the last years. So increasing the market share of Islamic finance at a global scale is the major challenge that is hiding minor challenges at local scales. That's why in my presentation I will focus on four main challenges. The four challenges are the regulation challenge, the expansion and the business growth challenge. The third challenge is about the new entrants and the threats that they represent. Then the human resources and talent development challenge. After this, I will establish a SWOT analysis, and the outputs will serve to define the transformative business model of Islamic banks. Today, with Basel III, IFRS 9, with the new regulation like AML, anti-money laundering, with consumer protection, all these regulations would impact the financial performance of banks. Moreover, in many countries, Islamic banking doesn't have a comprehensive regulatory framework, which impact the Sharia credibility sometimes, or the financial performance. That's why we need to upgrade our business model and to implement comprehensive regulatory frameworks. I have the research paper that can be shared later by Aaoifi, which gives more details on each of these points. Second challenge is about the business growth. Apart from the Middle East, GCC, Southeast Asia region, I would say that Europe and Africa are seem to be the most interesting regions for expanding Islamic banking, for two reasons. The first reason is that we have important Muslim communities that are living in those regions. Second, because we have close economic and commercial links and relationships between these regions and Muslim countries. But it doesn't mean that if you have a business model that works in GCC, it doesn't mean that your business model will work in Europe or in Africa, which means that we have to upgrade our business model again in order to adapt it to each region specificity. If you go to Africa, the constraints, the challenges are totally different from GCC and from Europe. If you go to Europe, the same. So we need to upgrade a business model to be inclusive so that we can adapt it every time we go to a region in order to expand the activity in many regions in the world. And here, globalization seems to be the key word. Globalization is the mixture of global and local. So, in fact, standardization is a very important thing because it brings more transparency to investors, to clients. But globalization can adapt the principles to the local practices and customs. I would say that globalization is what really can make standardization acceptable by everybody. The third challenge is the new entrants. The new entrants, I made an inventory of all the new entrants that are existing today in different regions of the world. There are three types. First, the car manufacturers. I found that most of car manufacturers, they have their own subsidiaries, their own finance companies that are granting loans in order to buy their cars. For example, Toyota, they have their own company, Volkswagen, Renault. All these car makers, they have their own subsidiaries given granting financial services. Second type of new entrants are the telecom operators like M-Pesa, Vodafone, Orange Bank. They are all launching mobile money accounts and mobile wallets. The third type of new entrants are the electronic platforms like Amazon Pay, Google Pay, Apple Pay. There are also other new entrants like Invoice and pay later platforms like Klarna, like RatePay, and which can be assimilated to e-murabaha, to an electronic murabaha after some minor adjustments. There are P2P platforms, peer-to-peer platforms like Lending Club in US. There are also cryptocurrencies like Bitcoin, etc. So these are new entrants. The question here is, what is the type of relationship that can link those new entrants to Islamic banks? Is it about competition or about collaboration? I had many case studies, and I found that it is more about collaboration. For example, finance companies that are belonging to car makers, most of the time they are outsourcing part of their activity to banks. For example, Toyota, Volkswagen, they are always dealing with banks, and sometimes they are just offering white labels for their loans and for their financing services. The same, if we talk about M-Pesa, Vodafone, there are BNP Paribas in France that launched Hello Bank, which resembles to M-Pesa. We have also P2P platforms. For example, Lending Club in US are dealing with banks. So we are moving from P2P platforms, peer-to-peer platforms, to institutions, to peer platforms, which means that we are opening a new area of collaboration between new entrants and banks. The fourth challenge is the human resources and talent development. This is very interesting because when you are transforming your business model, sometimes your human resources can be your first constraint, and they can stop and limit your transformation process. And thus, you need to find a solution. And I found that AT&T, the huge telecom operator in the US, experienced the same issue. They had to transform their business model, and they choose to retrain 280,000 people instead of hiring new talents. So they launched a platform, the training platform, constituted of 3 tools. The first tool is career profile tool. I'm an employee in AT&T. I just check the platform and I choose what is my future job. Then through the tool, I can check what are the gaps in terms of skills. And then there are a series of modules and programs and nano degrees, they call them nano degrees, where I can learn the new skills that I need for the future. This is a very interesting experience that we can use in the Islamic banking sphere. This is the first part. Now the second part. Before introducing the transformative business model of banks, let's see what are the outputs of the SWOT analysis. Let's start with weaknesses. Today we have a weak market share compared with global finance. In many countries there is an absence of comprehensive legal and regulatory frameworks for Islamic banking. At the same time, from strength perspective, we have new entrants that are not ensuring all the banking functions. The transformation function is still monopolized by banks, and the pace of fintech adoption by customers is not yet alarming. It's not very it's alarming, but it's not very alarming. The threats today, the regulation is getting toughened. New entrants with new simple business models are introduced to the market, and human resource seems to be a real issue today. In terms of opportunities, today we are trying to create national platforms to reduce the cost of treatment. Let me give you the example of the Monetary Agency of Singapore. They are trying to create a KYC platform where all banks are participating, so to avoid duplicating the cost of KYC treatments. We have financial inclusion efforts, and we have collaboration with new entrants and incumbents. The main output of this SWOT analysis is collaboration. Today, collaboration seems to be the main principle underlying the business model of the future of the next generation of Islamic banks. We can have collaboration with other banks in terms of national platforms. We can have collaboration with other players from other sectors in order to offer and to provide co-branded services and products. So this is a scheme where I imagine that Islamic banks would be like a node of platforms, a node that connects different platforms. There are 3 types of platforms here. The first platforms is those who are shared with other banks. So like KYC platform in Singapore. We can have internal platforms like the training platform that AT&T launched. And we can have a third type of platforms, which is MSP, multi-sided platforms, and P2P, peer-to-peer platforms, and institution-to-peer platforms. Let me give some example for each type of platform, which means that everything in the bank will function through platforms. Sorry. Let's start with the internal and shared platforms. For example, we have, through internal platforms, we can have the automation of all processes. Example, loan origination process, audit compliance, account reconciliation, all these functions will be taken charge by internal platforms. 2, we can customize training and contents at lower cost through like the example of AT&T. 3, we can create new utilities and avoid duplicating work between institutions like the KYC platform. And 4, we can upgrade existing utilities like the clearing platform or the credit bureau through using new technologies like blockchain. So this will reduce the cost of transaction and internal costs. For the MSP, multi-sided platforms, which is a new concept, P2P and I2P, we have for the MSP, we have 2 strategies. Whether other platforms will open the door to banks in order to grant their financing, or banks will start their own platforms, then they will open the door to third parties. Let me give you an example. For example, Souq or Amazon in GCC, they are offering already products and services through their platform. They can open the door to Islamic banks in order to provide e-murabaha, which means we can buy products and services through e-murabaha. We can connect customers. For MSP, for example, I am a bank, I have customers. I can create a marketplace where my customers can meet, and if there are any business opportunities and they need financing, I can be involved at that time. So MSPs are a very interesting concept that we can develop in our countries and in Islamic banks. P2P and I2P. P2P, peer-to-peer platforms, their capacity to replace, according to many reports, their capacity to replace banks was overestimated. Now in US, for example, Lending Club is collaborating with banks in order to animate the platform. And we are moving from a P2P to a pure P2P model to an I2P model, where a bank can have its own P2P platform, then it can invest in this platform, moving from P2P to I2P. So to sum up, I think I didn't, I'm on time, I'm punctual. Okay, there are 4 main conclusions. The first conclusion is that fintech is expected to be the major tool of this transformation. Nevertheless, fintech would not revolutionize financial services, it will only reform them. Second principle is that building collaborative platforms and ecosystems is the main principle underlying the business model transformation. We will not work alone. We need to work with other players. Third, we have to make sure that adopting a new technology requires the implementation of a completely new ecosystem, while making sure that the existing one would not be able to upgrade its components and thus safeguard its position in the market. This is very important. Sometimes we have a very good technology, but at the wrong time. We have to implement the whole ecosystem so that it can host the new technology. And finally, HR and talent development is the key factor of success. We don't have to work independently of this issue. It should be the main focus in any transformation. As you know, the exercise. This exercise is very difficult of predicting the future. It should be conducted on a continuous basis. So if you ask me to do the same exercise next year, maybe I'll have different outputs. But it should be made on continuous, conducted on continuous basis. Thank you very much. And
شكرا دكتور أحمد جزاك الله خير. You're going to speak from there? Okay. You have a presentation?
No presentation.
Okay.
Just my face, my happy face. Assalamu alaikum, I'm very happy to speak to you here today. My presentation is just going to be me talking, very simple message about where I think Islamic finance is today, where I think it needs to go to in the future, and why technology actually is more than just enabling more efficient Islamic banking, but actually I think will help Islamic finance get closer to its actual promise of what Islamic finance should be. In terms of myself, my name is Khalid Halara. I am a managing director of my own consulting firm in Sukuk and ratings. But what's probably more interesting is that I'm also the chief strategy and risk officer for a fintech startup that I hope, inshallah, by December, January, we will do the very first Sukuk on the blockchain. And I will talk a bit about that more later. But I look at where Islamic finance is today. So in my previous role, I was head of the Middle East banking team for Moody's, and I was global head of Islamic finance for Moody's. And my portfolio, I had 60 banks, 45 conventional, 15 Islamic. Now, what I'm going to say may be controversial to some people in the audience, and it's not my intention to upset or offend, but it comes from the heart. When I say that Islamic banking at the moment, I don't think really fulfills its promise of what Islamic finance should be. I think a lot of it replicates the strengths and the weaknesses of conventional banks. And I can say that because I looked after conventional banks here, and I looked after Islamic banks here, and when I was doing the ratings and the risk and the analysis and the profits, I wouldn't say it's that different in terms of what it does for the economy, because at the moment banks take your deposits, finance cars, finance houses, finance mobile phones. You know, it's this consumption-driven economy. Now, for me, Islamic finance is more about asset finance, as I'm sure is obvious, but to go to a more asset financing model is actually quite difficult. This is a different type of risk. Regulators don't necessarily want this different type of risk because it's a very different type of analysis, different regulations. So Islamic banking today, for me, is just the foundation of where Islamic finance needs to go. It's really only the beginning. From A to Z, I think we are at E or F. There's so much further to go, but it's the platform where now we can go to the next stage, and for this is why we need technology. So technology is already being used to make banking more efficient, customer acquisition, mobile banking, etc. But this is not changing the nature of Islamic banking. What I believe is the nature is creating more of an investment type culture. If you look at all of the problems that we have in the world today, it's not an accident, it's about debt. Too much debt at the country level, too much debt at the corporate level, too much debt at the personal level. And what has been the solution to the crisis? More debt. This is not going to end well. At some point, it's going to end even worse maybe than the last time. So for things to change, we need to have financing that's more about investment rather than lending, rather than debt. Now, the project I'm working on called Blossom Finance, it's a digital platform on the blockchain. And what we are doing, our first project, is for microfinance in Indonesia. We're going to launch a micro sukuk, maximum $500,000, $1 million, so nothing really big on the scale of Islamic finance that is 2 trillion. But on this side, we are going to fund micro entrepreneurs, microfinance projects, the community, the people, the low-income people who need our help, who need the financing. But what's more interesting is where the money is coming from. We have launched our website. We have, done a bit of social media and these things. We have 1,400 people who have registered their interest to invest in social impact projects. Now, these people are from New Zealand, they're from Australia, some are Muslim, some are non-Muslim, but this, for me, is what Islamic finance should be heading to, bringing in new funds, maybe not typical deposit type funds, but people who are looking to invest, people who want to sort of share the profit and also, crucially, share the risk. See, when I put my money in a bank,